Okay, it's time. Nvidia hitting. George Tsilis joining me, our senior markets correspondent. GT, the man, helping us through these numbers this afternoon. Let's get to it. Firstly, revenue 30.0 to the nose. Thank you, Jensen. That's very convenient. That makes it a little bit less than a $1.3 billion, a little bit less than $1.2 billion beat. The street was looking for 28.86. So, yeah, okay, all right, nice beat, good. Is it big enough? I'm not sure, George. We were talking earlier about $2 billion kind of being the minimum beat, as you know, who knows? But that was just us kind of, swinging at fastballs. Who knows what the market needs? But that seemed like kind of an easy sort of figure to say, impressive or not. $2 billion on the estimate of 28.9. So they deliver 30. Not exactly a massive one, but they're going to throw in $50 billion additional buybacks. So that never hurts.
I think that certainly helps. I mean, considering every dollar move in this stock is close to $25 billion. So, look, I think, like you said, OJ, I think the expectations are for them to beat and raise the bar quite a bit higher. Right now we're sitting basically at par relative to the close or approximately so. I think the 68 cents certainly beat the estimates, which was 64. That's also very helpful. That's, if my numbers are correct, close to 150% on a year-over-year basis. Now, you got to look at Nvidia as its own. I mean, this is very difficult. You can't compare it to another company.
You can't.
Right now. You have to compare it to some of its own, historical financials, which you could say really don't matter either, just because of the technology arms race.
Well, the ones from the last couple quarters probably do. I mean, to your point, George, because you can only compare it to itself, right? When we're trying to figure out if this is going to be able to sustain, its trading level, the growth is going to be dropping off pretty substantially from the 270%, 260% we got in the fourth quarter last year, first quarter this year. So we're hitting now into the 100s. Next quarter is going to drop off more. So I guess that's why they're ready to throw in the buyback and stuff, saying, look, we know peak growth is behind us, but it's still huge.
Yeah, that's the thing. I mean, they're still pacifying investors now. You wouldn't think they would need the buyback considering their growth rates. But, at the end of the day, $50 billion on a relative basis is nothing. It's a lot compared to their sales, because if you look at their sales and you analyze this number, it's about 120 billion. So, I mean, that's quite a bit of money relative to sales, but nonetheless, it's a very small sliver of the market cap. So, I'm not surprised to see what we're saying, which is relatively balanced action in the after hours. I mean, there was 323 million shares traded today on a $3 trillion company. So this is the context of something so large we're talking about. It's almost unfathomable. But
that's a fair point.
The questions are for Nvidia is it two questions. Is this too good to be true, or is it too good to be sustained? I think the latter is probably more poignant than too good to be true. I think it's happening because it is true in terms of the growth rates they're seeing. But I'm coming into this with a little bit of healthy skepticism in terms of the growth rates going forward, because they are expected to decelerate, and they should, because you can't keep those initial installment growth rates going parabolic forever. And so you have to expect that to be the case for Nvidia. But again, I could certainly see quite a bit of action, especially on the open tomorrow. But whatever happens tomorrow's open is irrelevant. It really comes down to the close, and I think that's what from a macro-centric market standpoint, we're going to be looking for very carefully.
Sure. We're going to have to see if this is a big enough number to give it momentum and give the market momentum through all the macro stuff tomorrow. Here's the thing. At 46 times forward earnings, obviously it's expensive, compared to the S&P 500, but compared to what you're getting, there's a lot worse stocks that are trading at either more expensive prices or at them. I mean, even someone like the consumer, basket, like very cyclical, much more cyclical businesses than the absolute turbocharged secular trend of AI. So it seems like even if we do soften up, like it shouldn't be too drastic. It's just a matter of whether or not this stock still has nitrous in it to carry the market and create this entire suite of winners alongside with it. So that's where, I think to your point, that part gets a little bit maybe harder to justify when we are sort of on some of the downslope of this initial massive event, right? This massive awakening, this breakthrough.
Yeah, I mean that's the thing. The previous 4 quarters, maybe even 6 quarters, if you just look at the earnings growth, it was like 700% on essentially
Of
sales
course.
growth that was, you mentioned, over 200%. So, that's not sustainable, but that's a shift essentially of a business and technology, a manifestation that's happening. And so that is again something we don't necessarily will see. We won't see that again. But if you look at valuation, this is where it's very difficult, because you can't compare it to another company. It's its own industry group. If you ask me, it's effectively a monopoly in the data center ecosystem. But the historical 5-year average multiple is around 47 times, so it's right there. But if you look at the earnings growth estimates forward now, it's still 166%. So even if you cut that growth estimate in half, you would say it's still cheap. And so, but again, the way this market is behaving, I think the context of the macro market is a little bit wary, considering the policy shift we're expected to see coming up later this year and beginning of next year. There's a lot riding on this name. There's no doubt. But you have to consider, like I said, that the trailing, the forward multiple is really not that high compared to its 5-year average, but its growth rates are still quite a bit above them.
Okay, that's very much true. And even when they slow down, they're going to be slowing down to still a fairly blistering pace. A few commentary items, by the way, just in terms of the language from Jensen Huang on what they see is in terms of demand. They're saying Blackwell production ramp is scheduled to begin in the fourth quarter, so that's certainly helpful. They did say they had to change some of their production steps, the Blackwell mask production step they say they had to change. So as they're coming off, by the way, a few of the other semiconductors are as well. They say that they're going to ship several $1 billion of Blackwell revenue in the fourth quarter. Now, they started off with saying Hopper demand remains strong and that the anticipation for Blackwell is incredible. These are kind of the words that I think the market wants to hear, and we're ticking higher now because this is really the key stuff, is do we get a fresh wave if Blackwell delivers like monster billions, back on track with kind of what folks were hoping. So I think their words are helping out here a decent amount. George, thank you for the analysis. We're out of time, even though we could keep going. This is the end of the road for Market on Close.